Welcome to Trading Lounge and the European indices for the 4th of November, starting with the DAX on the daily chart here. As you may be aware, from the low here all the way up to the top here, we can look at this as wave 3 and ABC as wave 4. That would be in line with the US markets. Or we can also count it up as wave 1 and wave 2 pulling back as an alternative count. So wave A is quite clear. And it's in 3 waves here. Then B wave is in 3 waves, so that's all good. And then we're looking for 5 waves coming down into this little section here. Now we don't quite have those 5 waves from B to C just yet, so let's just go in and take a look at that. On the 4-hour chart here, we can look at from wave B up here as 1 and 2 here, and wave 3 here, and the 38.2% or the 40% retracement level is just here. The market is above that. In a lot of other markets, it's moved up to the 61.8%. So it's, well, technically it's still wave 4 until this particular top is, that low of wave 1 is breached at that point. Okay, so that's so we could still leave wave 4 there. We would need to see this market move back down from this particular point. Obviously the elections are driving this, and the counting and the voting and so on, and it appears that Biden's got a bit of an edge, and the market seems to like that. That could change. It's just going to be volatile. I mean, what else can I say? I'm still missing a wave to the downside within all of this. I mean, maybe we have to look at this as 1 and 2 here and 3 here and 4 here and 5 here. Or do we squash and put in 5 waves based on this little correction here? Either way, it would be forcing it, and I'm not really wanting to go there just yet. But also, too, I don't want to stick my head in the sand and think that this market can't just continue to the upside. So we also need to look at the positive count in regards to this as well. We knew that the elections would be spiky, volatile like this. Fantastic for breakout and short-term traders as such, but for us in terms of trend trading, I try to cover most bases in a balanced way, but yeah, look, I have to raise the flag. We're a wave short. I could force it in here somewhere. Somebody else may have a better count. If that's the case, please present it. Yeah, technically, if this market continues to move up and overlaps wave 1 here, then we need to eliminate this count, and we could be moving into a more of a complicated correction as well. So as I explained with the S&P 500, we may be moving into, let's just check this out here, as a triangle pattern. I mean, until, if this is election driven, then it's not really over until Trump has his concession speech. That means he concedes, because if he doesn't have a concession speech and he doesn't concede, then he can still fight the presidency through courts and other means. And at the end of the day, not that anybody's ever done this, you don't have to concede, you don't have to have the concession speech. And if that's not the case, then way at the end of the legal channels is that each state has one single vote. And obviously there's more red states than blue, so why wouldn't Trump? He's broken most of the rules, so why wouldn't he work outside the box and delay it to have each state have their own count, and then he can stay in power at that point. So a triangle might be quite fitting for that exercise. So yeah. And it's not that the D wave needs to end at the 61.8% mark either, by the by. It could also be higher up here as well. Can go up to the 78.6, so to speak, as well. So look, yeah, there's problems with all of this. If we just I'll just save this for a second. We can go in and have a look at the little move to the upside here, which I'll just do on the 15-minute chart. It's counting quite nicely as an impulse wave to the upside here. So I'm just considering this wave C and 4 here, but it may not be the wave 4 may not be the case here. Just looking at this particular trend here. So in counting this, wave 1 here to me is good. It's it counts nicely in that regard. And as 5 waves, a nice little ABC here. This is a bit of a rickety road through here, but looking at this is probably the 3rd wave and the let me just see what I've done here. Probably have to look at this a little bit more differently, actually. I mean, we're extending here, so it's like this has got 3rd wave sort of properties. Yeah, a little bit tricky here to count, I must say, in this little section here. I mean, the 3rd wave looks nice in here. I can see 1, 2, 3, 4, 5, and it would have to count that as the 4th and the 5th wave. So I'm wondering if somehow we've got to count all of this as wave 1 here. I'll need to pull that apart and check it out again, but we are getting impulse waves within all of this. So just checking this here, that's 1 and 2 and 3 and 4 and 5 into here, and that can be 4. That could be 4 here with 1 and 2 and 3 and 4 and 5 here. Look, it may be another high here, but even at worst, then at worst here, we could pull back to wave 4 here, which would be into this space here. So it's possible for it to move back. We're going to be dancing across the 12,000 here in that case, and then a move up. So I'm just pointing this out because of stops. So if you're long, then you'd need to leave your stop just out of the way here at this point. And we really haven't seen, it's the end of the session in the US, so we'll see it soften somewhat, and we'll see this soften, and we haven't really seen a correction. I mean, that's not really, I mean, it is a correction. The markets are just trends and corrections of different degrees, but we haven't really seen a nice correction around this quite a large number here, and we'd normally look at group 1 above and then group 2 below. So group 2 below would be, well, it's way down here really. So it can certainly correct in this range here. That would be its correctional range there, even a bit lower into the 11,720 area through here. But based on this being a 3rd wave, I wouldn't see it come down much past the 11.9. But normally the distance above could be the distance below. So we'll see how that goes. If support comes in on 12,300 tested support, then the market's going to move up to that point. Then you need to look at the next level, which is a 12,500, and will be in its trend at that particular point. But certainly, if this is election driven in this early days, and we've got a few more days to sort of count and get a better idea of things, well then Biden's got that kind of lead there in the counting, so to speak. So the trend really should continue in that regard. Let's have a look at the FTSE. So the FTSE, I don't understand this particular countdown here. I mean, I can count it in terms of correctives, and I can give you a story to it. But when Elliott's not clear to me, I'm just better off saying, look, it's not clear. I don't understand it, and then I revert back to the levels, or I'll revert back into intraday counts that we can pick up and work with. So in this move up through here, we can count 5 waves up here. It's a little bit dodgy, and it could probably count as corrective as well. But this move down through here, it could also count as impulsive, or it could count as corrective. But it has pulled back to the 61.8% mark, or the closest largest number, which is the 5.5. We are seeing a bounce. The bounce is in line with news. So I guess, we need to track this little move to the upside. If this is correct, then we'll be looking for 5 waves in this area. So will it make new highs, or will it just go to create a double top? But the double tops are never the end of the trend anyway, so I would expect it to at least make a high above here if this is correct, if this is going to be the case. But this would be, even though that this is a different count than the S&P 500 and the DAX and so on, it would probably just follow them up, you know. So let's go in and take a look at that. First of all, we should look at the 4-hour chart where, like the DAX, we were looking for another move down, but we don't have that move down. And this can actually be moved to this point, but it doesn't matter if it's moved to this point or this point. This move up here has overlapped this one, and now it's overlapping this one here. So if this was going to be 5 waves down, it would have to be like this here. But I don't like forcing things, but that's where it would play out at this particular point in time. But also too, we can also consider the triangle pattern that we're looking at in the S&P and also in the DAX as well. So let's just take a closer look at this here. I need to pull that apart a bit, just check. Sorry about that, I thought I'd counted it, but obviously I haven't. So this first wave off the low here, we would have to say is a little bit messy, but in one way or another, we would have to look at this as probably, I mean, it's an expanded flat correction, which in the textbooks you don't get in wave 1 and 2, but I see it in leverage products, especially in the FX market a lot. So that book needs to be sort of updated a little bit, but we'd have like 1 and 2 in here, and 3 and 4 here, and 5 and A and a B and a C for 2. So wave 1 here and wave 2 here for that. Or an A and a B. So this looks like a structure in here. That's a corrective. That could be part of that. Because that's done that expanded flat, this one here looks like it could be part of that. But if not, that would be 1 and 2. There would be wave 3 in here, even to either to here, 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 4. So we've got, I'll just draw this. I'll probably have to go to the tick chart, but I'll just see if I can get it here. So it would be something like this, 1 and 2 and 3 here. That would be 1 and 2 and 3 and 4. And this would all be 5. Let me just check it again. Definitely a wave 4 because it's gone sideways here. I'm just wondering if that's 1, 2, 3, 4, 5 for 1 and 2 and 3 and 4 and 5 here. So that can present as 5 waves to there. So really, at worst, if this was an A wave, if this was an A and a B and a C wave here in that triangle pattern, and I'm just talking about this for the stops, then if you were bullish here, you would really need to keep the stops away from this level here. But because we're in this space, then the levels are 5, 8. So we always call 8 a profit taking number. So 5, 8's a minor level. So we're getting hit there. So we're in group 2. So this is 5,500, 800. So 1, 2, 3, 5, 8, 13. But we go to 10, 20 at that point. So that's there. And then we've got group 2, which is 65, in this case 650. And then 720 here. So we're well into group 2 here, sort of close enough. So we could expect the market to come back to that area. Just get the right numbers there for that. So they're the levels at that point. So I guess what I'm sort of looking at here, sorry to drag my feet a bit, but we could be looking at an A wave, a B wave, and a C wave to that point. So we know that stops would be safe under this point here. But otherwise, we'll see a reaction from this space here, probably come back to support, And if it's going to move up at that point, then we're going to see something like this. We're going to see a bit of a dance across here and then a move up. So the trade would come in, if you're not already in, then that would be the trade area through there. So this is a classic trading levels pattern. So we can look at that here visually a bit better. If this is the 5,800 across here, we would see the arrival, which we've got already. We haven't seen the full reaction yet, which can take us down to the 72. Then the first high above the level, then the ABC correction, and then the support over here, and then we go long from that point. So that's the pattern that will occur there, because we've already started to see the reaction from there. Do you know what I mean? So the arrival, the reaction, the first high above the level, ABC here, and then we can go long from that point. That would also give us, we could also look at this too in terms of one here, two here, three here, four here, five here, then the ABC correction. So if that's the case, then we can look at this here to here, and that's the 38.2% retracement level. So it could come down a bit lower, could come down to here before making that high here, and then having an A and a B and a C wave coming into this space, then moving up. So they're the two pathways it can take. Always like to be conservative, so yeah, as always, messy, but with a little bit of body and shape to it. So it'll be nice to see if we can get that 5-wave structure to the upside there. But at the moment, this could also be counted as wave C here. I don't think it's the case, but technically it can. And that would put us into a triangle position at that point, because it's a bit too high for wave 4s to be there. I just got to put this back and close it so it opens again in that space if I need it again. All right, look, I've waffled on long enough. But yeah, look, if we get this 5 waves here, then that's going to put us in really good stead for a move to the upside here. So we need to see a little wave 4 here, and then a little wave 5 here, and then the ABC correction, and then we could push up. We could probably even put this wave 1 here, but we can work on that later. So, recapping, I don't know if this is going to move up. I don't even know if we're going to get 5 waves here yet. We can obviously see this line through here at the 5.8 is really like strong, isn't it? You know, so it's a strong resistance. So if it gets support there, we can expect it to be a mess, like I said, but it should have form and body. And if it's going to move up, eventually it's going to be a tested support there. And the classic trading levels pattern will get you through that safely in terms of buying new highs. But we need to identify 5 waves first, and we also need to identify the 5.8 as being the tested support. Alrighty, cheers.